Welcome to the Deep Dive. Today we're tackling something pretty major. These new U.S. import tariffs announced April 2nd, 2025.
Yeah, a really significant shift. We're going to try and unpack what's driving it, the potential, ripple effects.
And then maybe look at some history, see if that helps figure out where this might be going.
Exactly. We're working from a YouTube transcript that really gets into the details, not just the announcement itself, but the context, globally and historically.
So our mission really is to help you understand the thinking behind them, what they might mean for the U.S., for the world.
And those historical parallels people are drawing, because they are drawing them.
Oh, yeah. And the immediate market reaction really, it sort of hammered home just how big a deal this is. The transcript points to this, well, sharp drop in global stocks right after. Almost 20% of global equity value just poof, gone.
Yeah, it evaporated.
Yeah.
That's a serious reaction. It tells you something about perceived stability or lack thereof.
Yep.
And the way the tariffs are structured, it's quite revealing too. The transcript breaks it down different rates, right?
Right, like 20% for the EU, but then 34% for China.
Japan 24%, Canada 25%. It seems directly tied to the U.S. trade deficit with each one.
Clearly targeting those imbalances.
Yeah. And the situation with China looks particularly tense. Talk of tariffs maybe going over 100%. That's serious trade war territory.
It is. But then there's that other piece, this 3-month pause on a 10% tariff for, like, the rest of the world.
Yeah. Almost like saying, okay, let's talk. An invitation to negotiate, perhaps?
Okay, let's get into the core thinking. What's the main driver here, according to the source?
Well, the transcript frames it very much as this Make America Great Again economic offensive.
Okay.
So it's presented as not just about trade figures, but a bigger strategy. More U.S. jobs, boosting prosperity, really pushing for reindustrialization.
Bringing industry back.
That's the stated goal. And central to that is tackling the U.S. trade deficit.
Which is enormous. The transcript mentions $1.2 trillion for 2024.
Huge. And specific numbers, too. China, $350 billion deficit. EU, $150 billion. Canada, $200 billion.
So the aim is explicitly stated as getting things more balanced.
That's the idea presented, achieving a balanced trade situation.
Okay.
Yeah.
Now, the transcript analysis, it mentions something about the cause being a skewed financial system, not just blaming the other countries.
Right. That's a fascinating point. While the administration might call countries profiteers, the source suggests the underlying argument is that the global financial setup itself is tilted.
Like the rules of the game aren't fair.
Kind of. And these tariffs are seen as a tool, maybe a blunt one, but a tool to try and, level that playing field.
Interesting. And part of that involves the dollar itself, right? A weaker dollar helping exports.
Exactly. The transcript highlights this view. A lower dollar makes U.S. goods cheaper abroad, boosting exports. It even notes the dollar has been trending down recently.
And calls this a potential reset. That sounds ambitious.
It's a very strong term, a potential reset of the whole global financial economic system. And that ties into another really big point the transcript makes, breaking what it calls the free trade taboo.
Meaning the long-held belief that free trade, minimal taxes on imports, is always the best way.
Pretty much. For decades, that's been the dominant idea. These tariffs are a clear break from that. It suggests a move towards maybe a more ideologically varied world, a multipolar system.
It feels like more than just a policy tweak then. It's questioning the fundamentals.
It really is, questioning the economic order we've known for a long, long time.
Okay, this is where the history comes in, which I find fascinating. The transcript draws parallels to the early to mid-20th century.
Yeah, between about 1900 and 1950. The U.S. actually had high import tariffs then, sometimes 20%, even 30%.
So this isn't entirely unprecedented in U.S. history.
Not at all. The transcript frames this current move as kind of reviving that protectionist era, even uses the term Liberation Day.
Right, and to really get why this shift now is so significant, we need to understand how the current system started. Bretton Woods, 1944.
Absolutely key. Post-World War II. The transcript explains how that agreement essentially made the U.S. dollar the world's main currency for trade and reserves, replacing the British pound.
So the dollar's power wasn't just organic market forces. It was a deliberate decision.
Very much a geopolitical choice. It gave the U.S. huge influence and created this constant, massive global need for dollars.
Which helped keep the dollar strong even when the U.S. started running those trade deficits we talked about.
Precisely. That system held strong for quite a while. Until 1971, famously, when Nixon took the dollar off the gold standard.
Ah, yes. The Nixon shock. Why did that happen again? The transcript mentions France.
Yeah, partly. French President de Gaulle was apparently asking to swap France's dollar reserves for U.S. gold, as per the Bretton Woods rules. That, among other pressures,
Led Nixon to just end the direct conversion.
right, and the effect on gold was immediate and dramatic. The transcript notes it went from, what, $42 an ounce?
To $700 by 1979, and now it's around $3,000.
Yeah, shows you the long-term ripples of these big monetary shifts.
So after decoupling from gold, the transcript describes this long period kicking off, really from the 50s onwards, of more free trade, more globalization.
Increasing globalization of production. Western companies started moving manufacturing to places with much lower labor costs.
And the transcript uses Detroit's auto industry as a prime example.
Yeah.
GM, Ford, Chrysler.
The big three, yeah. It details how they gradually shut down U.S. plants, moved production south, often to Mexico.
Driven purely by cost.
Largely. The wage difference was stark. The transcript cites figures like $30 an hour in the U.S. versus maybe $8 an hour in Mexico at the time.
That's a huge incentive.
Massive. And the result, particularly for the American Midwest, was this process of deindustrialization, job losses, economic decline for many workers.
And that vacuum, that shift, created space for others, like China.
Absolutely. The transcript points to China becoming this, global manufacturing powerhouse. First, simple goods, then increasingly complex stuff, exporting massively to the U.S. and Europe.
Leading to those huge imbalances, like the $350 billion deficit with China we have now.
Exactly. And this brings up a really critical concept the transcript raises: false competition.
What does that mean exactly?
The argument is it's not a level playing field if businesses in one country benefit from super low wages or maybe weaker safety rules or less environmental regulation.
Okay, I see. So Western companies with higher standards and labor costs are inherently at a disadvantage.
That's the argument. The transcript highlights this kind of paradox.
Yeah.
You heavily tax labor through income tax, payroll taxes, etc. within your own country.
Making domestic labor expensive.
But then you have relatively free trade, allowing goods made with much cheaper, less regulated labor to flow in. It creates this tension.
Right, like having two runners, but one has weights tied to their ankles.
That's a good analogy for the false competition idea presented in the source.
Now, despite these huge trade deficits for decades, the dollar didn't collapse. The transcript gets into the petrodollar system here.
Yes, crucial piece of the puzzle. Since the 1970s, there's been this understanding, basically, that oil worldwide is priced in U.S. dollars.
The most traded commodity.
Exactly. And the transcript adds that something like 65% of all international trade contracts are still done in dollars. Compare that to maybe 20% for the euro and just 2% for the Chinese yuan.
So everyone needs dollars, constantly, for oil, for trade.
Which creates this persistent global demand, propping up the dollar's value even when the U.S. is importing way more than it exports. It allowed the U.S. to essentially finance its consumption with debt.
The transcript also talks about the downside of that strong dollar, right? The shadow side.
Yeah. Great for American consumers buying cheap imports, sure. But tough for American companies trying to export things. Their products become relatively expensive overseas.
And it mentions the debt again, the U.S. national debt, $35 trillion.
Yep, $35 trillion, which the transcript notes was 124% of GDP back in 2024.
Just to put that in perspective for you listening, GDP is like the total economic output of the country in a year. So the debt is significantly larger than the entire annual economy. That's sobering.
It's a massive figure. And the transcript also briefly touches on immigration's role in this complex picture.
That's so.
It mentions the argument that a more open immigration policy might have increased the supply of lower-cost labor.
Potentially putting downward pressure on wages for the existing middle class.
That's the argument presented, contributing perhaps to some of the economic discontent that feeds into support for policies like these tariffs.
Okay, but these tariffs, they don't exist in a vacuum. Retaliation is a big risk, isn't it?
Huge risk. The transcript is clear about that. China, Canada, Mexico, Europe, they could all hit back with their own tariffs on U.S. goods.
Which would obviously hurt American exporters, farmers, manufacturers.
Absolutely. That's a major concern.
Yeah.
However, the transcript also floats a counterargument.
Which is?
That countries running big surpluses with the U.S. selling much more to the U.S. than they buy actually have more to lose in a full-blown trade war.
Because their economies are more dependent on that export market.
Potentially. The idea is that the country buying more might actually have more leverage, economically speaking. It's a controversial point, but it's in the analysis.
Okay, so let's just clarify what these tariffs are. They're basically a tax, right?
Essentially, yes. A tax on imported goods. which means the price of those goods usually goes up for American consumers.
But the transcript also notes that tax generates revenue for the U.S. government.
It does. And there's the idea that this revenue could potentially be used to offset some of that lost purchasing power for consumers. Whether that happens is another question.
And the other big effect, presumably intended, is to encourage production in the U.S.
Exactly. If a foreign company makes its products in the U.S., it avoids the import tariff completely.
So it's a direct incentive to invest here.
Right. And the transcript emphasizes that the administration is actively encouraging that kind of foreign direct investment, the goal being, more well-paid jobs for American workers domestically.
It all seems quite interconnected. The transcript even links this to immigration policy, suggesting stricter border control as part of the same strategy.
Yeah, it suggests that tightening borders, combined with trying to boost demand for domestic labor through these tariffs and reindustrialization efforts,
is aimed at improving the job market specifically for native-born Americans or legal residents.
That seems to be the underlying logic presented.
Looking bigger picture again, the dollar's dominance. The transcript suggests the administration sees that changing, that the dollar might face more competition.
It does. It suggests an anticipation that the dollar's role as a global trade and reserve currency might diminish over time.
Why? Just because of these tariffs?
Not solely. The transcript points out that past U.S. actions, using the dollar's status as a kind of political weapon, have already made some countries uneasy.
Like sanctions and freezing assets.
Exactly. That's apparently spurred efforts to find alternatives, trading in euros, yuan, maybe even exploring things like crypto for international settlement.
So this idea of a multipolar currency system, multiple major currencies used globally. The transcript suggests that's the long-term trajectory some economists see anyway.
Yes, that's presented as a longer-term prediction by some economists. The dollar's dominance wouldn't last forever.
And maybe, just maybe, these tariffs are an attempt to manage that decline, to kind of steer it towards a soft landing rather than a sudden crash.
That's one interpretation the transcript offers, a way to adjust the U.S. economy for a future where the dollar isn't quite so central without causing a massive global crisis. It's a proactive, if risky, strategy.
Yeah, risky feels like the right word, because the perspectives are clearly divided.
Absolutely. The transcript highlights the stark contrast. On one hand, the administration's apparently optimistic view, seeing market jitters as just a transition phase towards a stronger domestic economy.
And on the other,
Skepticism from proponents of the existing global free trade system. They predict major losses, disruption, trade wars, basically a negative outcome.
which really brings us back to the core uncertainty, doesn't it?
It does.
Will this strategy work? Will using tariffs lead to the desired reindustrialization and balanced trade? Or will it just spark destructive trade wars that harm everyone?
That's the trillion-dollar question, isn't it? And the transcript emphasizes the outcome really hinges on how other countries react and what happens in those negotiations that are presumably underway or about to start.
It's definitely a high-stakes moment. Huge potential consequences either way.
A real gamble, you could say. And the outcome could reshape the global economic map for years, maybe decades.
So just to wrap up our deep dive here, we've looked at this major U.S. shift towards protectionism via tariffs. We've dug into the history a bit, the dollar's long reign, the free trade era that might be ending.
And the potential for a pretty fundamental shakeup of the global economic order.
We started out wanting to understand the why and the what next of all this for you.
Hopefully we've shed some light on the complex forces at play here based on the analysis in our source material.
And maybe leave you with this final thought. History shows us global reserve currencies change. The pound gave way to the dollar. Now, maybe we're heading towards something more diverse, more multipolar. So as the U.S. deliberately tries to navigate or maybe even accelerate this shift away from the old order, what completely unforeseen consequences might pop up? What new alliances, new tensions, new global power dynamics could emerge from all this?
Definitely something to watch. The ripple effects could go far beyond just economics.
Indeed. Plenty to think about as these events unfold. Thanks for taking this deep dive with us.